is if you're long bonds and you're staying up all night worrying about what rates are going to do, sell your bonds, right? I mean, there's no reason to hold an asset that's keeping you up every night. So here's what you need to know before the bell. On Friday, the market sold off. Again, don't put a lot of stock into Friday's sell-off. It was a big options expiration day, as I said. And we came down and we're sitting right on the 20-day moving average. This post-election rally was extremely strong. It was just a vertical spike. So not surprising that, markets kind of got stretched, pretty far from the 50-day moving average. So they've got to come back here a little bit. And everybody's just kind of starting to settle down a bit post-election, trying to sort things out. So again, not real surprising here. Markets also got very overbought, so we're working off that overbought condition. We're close to triggering a sell signal. I wouldn't read a whole lot into this right now. Again, we've got some variabilities that are kind of pushing through the markets right now. This week and next week's going to be light trading. A lot of people are out. So we could see one of these periods where the MACD comes down, kind of flips around a little bit at a high level, and the market post-Thanksgiving tends to rally into the first week or so of December, and then you get mutual fund distributions. So again, I would expect a lot more of this this choppy trending action going into the end of the year. Now, once we get into 2025, it's a little bit different story. So, but again, for right now, the trend is probably positive, at least for the next month or so. Again, a lot of buybacks, performance chasing, window dressing, all these type of things going on. They'll probably provide a bit of support here. But again, as is always the case, we have to remain a little bit cognizant of the risk. It doesn't mean that just because normally that's what happens, that's going to happen every single time. There are certainly things that can come up that can certainly weigh on stocks as well. But at least for right now, the trend looks positive into the end of the year. Where we finish will be a little bit of a different story. Looking over at bonds, of course, interest rates have been kind of all over the place lately. We saw, and particularly over the last really kind of 2 weeks, interest rates have just been bouncing up and down and very much in a pretty tight channel here. But we had this big move running into the election. A lot of that was hedging for the election, not knowing what was going to happen. So we saw a good bit of that, but interest rates are extremely overbought here on multiple levels, and bond traders are very, very short. We've got one of the biggest short positions on bonds right now, at least in the futures market, that we've seen in a while. That's typically a good setup for a yield reversal. So you're going to see a bit of potentially here bond prices move up as yields come down. Again, into the end of the year, that would not be surprising. Now, again, there's a lot of sorting out of what's going to do. And again, in the short term, and I talked about this on Saturday when I was talking with Adam Taggart, which is if you're long bonds and you're staying up all night worrying about what rates are going to do, sell your bonds, right? I mean, there's no reason to hold an asset that's keeping you up every night, all night long. Yields long-term reflect economic growth, inflation, wages. We've done that research a billion times, and we just did an article on Friday, if you haven't read it, about Paul Tudor Jones, talking about exactly the same thing. In the short term, all that drives interest rates are technicals and short positioning by bond traders and hedging by hedge funds, etc. Long term, it's economics. So again, you got to get your thesis on what you think about bonds are going to do over the next year, 2 years, 3 years, 5 years, because of what those drivers are going to be and where you think they're going to be. And if you can't make the case to own bonds, don't own bonds, right? I mean, that's personally up to you. Outside of that, though, jumping over to Bitcoin, which has been really, really interesting lately. Bitcoin's just had, again, a huge spike here as well. Again, this is all that risk-on post-election trade. Just right after the election, Bitcoin took off on expectations that hopefully there'll be some better regulation for Bitcoin coming. We saw the Bitcoin-related stocks, just blast higher. Bitcoin is exceedingly overbought and very deviated from long-term means. So you're going to get a correction here at some point, whatever drives it, who knows. But you are going to get a correction probably back towards 70, 75,000, somewhere in there. And that's going to give you a better entry point to add a position if you want. It's just technically, you've got the MACD extremely stretched. And the last time that you had such a stretched MACD and overbought condition, Bitcoin just went really nowhere for quite a long time and consolidated a lot of that move. So we may be moving into one of those situations as well. So again, just whether it's it's gold or whether it's Bitcoin or whether it's stocks or bonds, remember technicals are what drive prices in the short term. That's all that matters in the short term is just near-term price action. Long term, if you're a long-term investor, That's all about fundamentals. So you have to make your fundamental case. Whatever that is, one way or the other, make your fundamental case and then build your positions around that. But understand that technicals are going to drive the short term and the volatility. And as I said, if you can't stand the volatility, sell the position. There's nothing that says you have to own something that's keeping you up at night. That just doesn't make any sense at all. Well, anyway, that's what you need to know before the bell this morning.